All right, ladies and gentlemen, welcome back to another episode of MadHouse Show. My name is Cyprian Francis, and with me, as always, co-founder, top trader, head developer, Mike Patton. Good morning, Mike.
Good morning, Sip, and good morning, everyone.
Today is August 10th, and the markets are buzzing primarily because, hey, inflation came in unchanged month over month.
Yep,
Wow. Every market's rallying basically, roughly 2%.
right.
So is that good news?
Well, the market sees it as good news for now. The expectation would be if if the acceleration of inflation slows down, that would be considered a reason for the Fed to slow down the rate at which it's hiking interest rates. But also economically, it's good too, because if inflation diminishes, then it means that goods and services are more affordable, which means more commerce, which means more expenditures, et cetera, et cetera. So, also because if we really think about it, our economy is a mixed economy, as they say. We have a variety of different things that we produce. We produce some commodities, we produce some agricultural products, but we also produce lots of goods and services. In fact, the majority of our economy is basically goods and services. So we are an economy that basically makes a lot of stuff, right? But a lot of economies in the world are based upon the actual raw materials that they have. For example, Russia is a great example of that. That their economy, although it is diverse, there is a massive amount of revenue generated from the sale of oil and other hydrocarbons. So, in short, you have countries like Japan, where basically they have no resources, and basically their entire economy is based on production of goods and services. So, our economy is somewhere in between. We do have a good amount of natural resources. So, what that means is when inflation's high, economies like ours will tend to suffer, especially Japan will tend to suffer because when the price of commodities goes up and we're not fully independent in our commodities supply, then there presents a problem. So if the United States was 100% energy independent, resource independent, if everything we needed we had in the soil already there, no need, and we were exporting this stuff, then we would not be in a vulnerable position. Now, as it stands, we do have a lot in this country. This is a very rich country in every level. So therefore, it's easier for us to weather this. But still, if the prices of commodities could come down, that would definitely improve the overall commerce picture. So, in short, it is good, but we also have to remember that although inflation didn't really rise, it's still high. So it's like we didn't get any worse, but we're still bad. And so that means that we're not out of the woods yet. It's just a relief that perhaps we're not getting any further into the hole at the moment, at least. However, come later in the year, probably that's going to change in the negative, but we'll see.
And the number today I believe is driven in part a lot by the oil costs coming in line. I think I saw an article that said, at least here in California, that for 2 straight months, the cost of gas has gone down every day. Now, that's got to play into the inflation factor. And so, is there something that is driving that decrease in oil prices?
Right. So, perfect question. So, in short, the CPI and which was the inflation data today was consumer price index called CPI month over month, and then we had core CPI month over month. In short, they core CPI that excludes food and energy, whereas CPI does not. So CPI includes food and energy. Core CPI does not. The reason they do that is just to kind of separate the impact of just the prices of goods and services versus the impact of oil. The reason why oil prices have been coming down is simply because oil inventories have been building. For 2 weeks in a row, we had inventory builds that were significant. The numbers were, and I just have to look at my notes here, we had 5.5 million barrels of inventory increase this week, and the previous week we had 4.5 million barrels. So a grand total of about of 10 million barrels of oil. Now, for those of you who don't follow oil numbers, you may be wondering, is that big? Is that small? That is big. Anything in the millions is big. So basically, what that means is whenever oil inventories build up, usually it means that consumers are using less oil for whatever reason. Now, of course, if you think about it, it could be because the price has been up so high that people just can't afford to pay for it anymore. One of my friends pointed this out to me, and I didn't notice this. I don't know why I didn't notice, but he said, "Have you noticed that there are a lot of cars on the side of the road that have run out of gas?" I was like, I didn't notice that at all. And the truth is, probably because I'm always in an Uber, so I'm not really paying attention. I'm on my phone or doing something along the way. So, but yeah, he was right. When I was driving, I noticed like, oh crap, he's right. There's a lot of cars that are just sitting there, and they actually are out of gas. So there is a reality here that there are a lot of people, and I'm not talking about like people that are really, really at the bottom of the income scale necessarily. That would be the case too. But I'm just saying in general, there are people who would otherwise be living comfortably who just have to shell out so much more money to fuel that it's really hurting them. Um, I mean, it's crazy when you think about how much money it takes just to fill up a gas tank right now, right? So, in short, um, I think there is a lesser demand partially because of the price. I think at some point people just say, "I give up." Um, Back when we had oil prices surge, about 12, 13 years ago, um, it got to the point where everyone gave up their SUVs. And if everyone remembers, like there was that period where everyone had an SUV. Everybody,
Hummers.
every soccer mom went the Hummer. Like, you know, couldn't even see over the steering wheel, but just had to have that, right? And then you had Ford and other companies making these supersized trucks that look like, I mean, they look like something out of a cartoon. They were so big, and then you get to the very, very end, and everyone's like, "Crap, I can't afford this anymore." So they start buying electric vehicles and hybrids, and they take off. All of those big SUVs from back then. Let's face it, no one drives them anymore. If you even are seen with one, people look at you funny. It's like, what are you doing, man? Like, were you a dinosaur or something? Get rid of that thing. So we still have now. The funny thing is, now we have a surge again of demand for SUVs, but newer ones, right? So we got the much newer ones. They're better. They're more fuel efficient, but they're not fuel efficient in the ultimate sense. They still burn a lot of gas. And I think that also the other sign is horsepower. You have this big horsepower race where everyone's like, okay, now we're at 700 horsepower. Okay, well, we're going to make 800 horsepower. These are numbers like years ago, we would say, like, holy cow, a car with 1,000 horsepower in the street, stock car. Wow. So we've have that, but then I think we just hit that wall now where everyone's like, crap, I can't really afford this anymore. I need to drive less. And that's everyone I encounter. I haven't really met anyone who said, I don't care about gas prices, except the person who never really looks at the gas price because I guess they're swimming in so much money, it doesn't matter. But for the rest of us, we actually notice this stuff. So that's one of the big drivers. But again, all of these things we have to take them with a grain of salt because the reality is we still have the situation abroad with Ukraine. And I don't think that situation is going to be able to be resolved anytime soon. So, as long as there's war and oil is involved, inventory supply is going to always be on the fence. You never know when something may get cut off or when someone may make a maneuver. I mean, for all we know, Russia could say, you know what, we're going to cut back our oil production. I doubt they'll do it, but they might if they feel like it's worth it strategically. They may do it. I mean, they've already done it with natural gas, and they make money off of natural gas, and they've been cutting supply. So they've made such a large excess of profits, it's possible they may do that. And it's not all Russia, by the way. I mean, I know the Western world tends to overstate a lot of that, but the reality is, there's before Russia did anything, before any of this broke out, we already had a supply demand problem where we had too much demand and too little supply, and that supply is not increasing fast enough. We have still all these infrastructure problems. OPEC and other countries, they really can't increase their production, but so much. And this is real. Venezuela has reserves that are not even online. So, in short, the supply demand picture is going to be tight forever. The only thing that stops that is if the economies of the world decline, if we have a real global recession, where we look like we're in one, but if it really extends for another 6, 7, 8 months, okay, now we can see oil prices come down sharply. And then, of course, the moment demand comes back in, we rise back up. If during that time of lower prices, the people in charge decide to really put some money into building better oil infrastructure and making our extraction more efficient, then perhaps we can meet the demand. But my guess is that with all the political leanings that we have now, I doubt that that's going to be the case. I seriously doubt we're going to see massive infrastructure investment into oil, and that just guarantees that prices go higher.
Yeah, well, it's good at least for the day-to-day consumers to have 2 straight months of lower gas prices, and
Can't complain. Yeah.
inflation isn't going up. So I guess looking next month, we'll want to see a little bit of a decrease. But overall, the market is feeling good about this news.
Yep.
We are in rebound mode, and it looks like the rest of the week we're going to be looking at PPI, which probably is, maybe along the same lines, and then consumer sentiment. So feeling like it might be a slower rest of the week. What do you think, Mike?
I am wondering. I mean, judging by the impact of this number this morning, which was big. I mean, the markets literally just went vertical. It was one of the most impressive moves I've seen in a while. So, if that's the case, then the numbers coming out later this week will probably have an impact if there's any surprises or anything that's different than what we've already seen. So, I don't think it's going to be that calm of the end of a week. And also, just putting this in perspective, we still have all of these escalations with China and the United States over Taiwan. All these things are really building up into a head right now, and they're really accelerating rapidly. So since the last time we spoke, a lot of things have happened over there, and I don't really think that can calm down that quickly either. It seems like both sides are committed in a certain direction. So I would just say, and of course, Europe has to deal with energy prices going up sharply as we get into the fall. So I would say probably this week, the world's going to be looking closely at our numbers. A bigger one, I would say, would be consumer sentiment on Friday. Normally, that's not as big of a number. It's always important, but not usually as impactful as it is now. It is critical to see how consumers really feel about the economy because that will have a major impact on two things. One, of course, the economy directly, expenditures, etc. But also, we're coming up into the midterms, and there's probably nothing out there that will more consistently change government than when people are not happy about their economic situation. And I know that the current administration is terrified about that. And I do know that the markets are aware that if the consumer sentiment keeps getting worse, expectations will have to be that we're going to see some significant changes in office. Whether or not they're going to be market beneficial or not, we'll see. But I will say, generally speaking, if it's a Republican led Congress, or probably you're going to get more business friendly legislation or less stringent restrictions, let's say based on ecological things or something like that. So we'll see. And taxes, of course, usually taxes usually these days, at least, usually the Republicans tend to be more business friendly on taxes. So we'll see. But everything's up in the air, and of course, when you're under pressure, pretty much all the parties they yield to whatever the pressure says. So I don't think the Democrats are going to be quite as determined to stay the course if they see that they're not going to get elected. So I would expect they're going to follow what the crowd or what the market wants. So we'll see.
Yeah, and that's the science and the art of investing is keeping an eye on these events and risking your capital accordingly, which is one of the reasons why we're proud to invite everyone who's watching, listening, to check out Madison Trading Software. The show is brought to you by Madison Trading Software. And in this next segment, what we're going to do is go over a couple names, and we're going to use the power of the technology to really get a sense of whether these are good picks, good levels to get in, validation from volume, from institutions, things like that. And so, in these episodes, we try and feature a few of the different sections of the software because there is just so much to dig into. And so, if anybody's interested in following along as we go over the section in testing the software out for yourself, feel free to hit that link in the chat, madisonTradingSoftware.com, and go grab yourself a demo. Also, if there's a name that you're looking at that you want Mike to go over, feel free to drop it in the chat, leave a comment. And so, Mike, I feel like we could just dig right into the stocks in the news.
Yep.
And the first one is a player in an industry that I'm very familiar with, and that's digital media. And so, the ticker symbol is TTD, the trade desk. And I would assume that not too many people are familiar with this company.
Right. Well, the truth is, I know it, but I'm not that familiar with it. They are a digital marketing company. Now, exactly how they do what they do, you would know more than me. But clearly they're a very strong player in the field. They're a larger company.
Well, here I'll give you just a quick breakdown of what
Yeah,
they do.
that'd be
It,
great.
it's like it's like a software
Hmm.
that integrates into all these channels. So if you're running a campaign of some sort and you want to run an ad on Hulu, on ESPN, on CBS, it helps manage all that. So very powerful technology in a very growing active industry, I would say.
Yeah, well, definitely the industry's active, and marketing, of course, is the lifeblood of all commerce. So, if you got a good product that allows better management and distribution of content, then of course that'd be good. So they've done well. Apparently, they beat on earnings per share and revenue estimates. Let me go over the numbers here. So when they reported, which was yesterday afternoon, on it was actually the ninth, the stock is now up. Well, roughly, I think. Let's see what the number is today.
$19.
Yeah, it's up huge. So trade desk currently, yep, about 19 bucks. Right. So pretty nice move, up 36.25% since yesterday. So really nice move. Now, of course, everyone wishes they were in this move, right? Well, the good side is usually when something like this happens, there's follow through. So there'll probably be some more opportunities, but let's go over what they said. So basically, they said that their earnings came in at 20 cents per share. The estimate was actually, I believe, 2 cents per share based on the numbers I see. So they came in 10 times more revenue or earnings per share than was expected, which is also up 11% from a year earlier. Revenue rose 35% to $377 million. A year earlier, they were at 18 cents a share and they were at $280 million. So these are very, very solid numbers. So, one of the key characteristics of a good company is growth. You have to see revenue growth. And here's the picture right there. I've said this many times and I cannot say it enough. If you want to find a growth stock, it has to look like this when it comes to sales. If you don't see consistently year after year after year after year, the company's growing its revenue. And this is a great way of looking at it because instead of me looking at it on a yearly basis, I'm looking at the trailing 12 months, meaning that each of these bars shows me the accumulated revenue that was generated over the previous 12 months, which means that if the revenue is increasing, each subsequent bar should get taller. And that's exactly what we're seeing. So, this is the keystone, the characteristic of a company that's going to grow. They keep growing their revenue consistently. And more importantly, the faster the revenue is growing, the more exponential it is, the better the prospects are. Now, this company is a profitable company. They are making money. Now, we do have to keep in mind that we did see a slump in revenues, or sorry, income over the last three quarters as far as the total number, but that doesn't mean that they're necessarily in trouble. Just means that that's the way it's going right now. Part of the reason for that, I have to say, is ad expenditures. I mean, let's face it, with the economy slowing down, a lot of people are not advertising quite as much. So this is actually a sign of what we already know is happening, that people are not throwing as much money into ads because they're not seeing consumers being able to spend as much with all this inflation. But nevertheless, if we look at the analyst targets right now, the analysts have this stock targeted as an average of 78.60. So we're right about there. We're only $4 away from that target. The highest target out there is 115. The lowest is $50 right now, and I would say $50 is out of reach. It's not likely that the stock's going to go down that far, but at the same time, we should keep in mind that we need to have a lot of room to the upside to be able to exploit something like this. So the best thing I can say as far as analyzing it, I've already jumped into it, so let me just finish my thought. The best advice I can give for this one is just to wait. Um, there is a possibility it can move up a lot more. I would watch that carefully, however, because I looked at all the analyst upgrades and they're pretty consistent as far as their expectations. They're typically hovering around the $70 to $80 range. So since we're already in the middle of that range, there's not a lot of room there for us to make a profit. So it would have been nice to be in this beforehand, but again, earnings is always in hindsight. You can't know what the results are going to be until they're released. And in this case, the numbers came out positive, but we'll see how that works out.
Let me ask this question, Mike. Let me
hmm
ask this question.
hmm
Using the color coded system,
hmm
right? Was this a four green before earnings? Did those earnings, are those incorporated into that view right now?
Yeah, down here we can see it. So it was not a four green before earnings. It's just now getting to that threshold. So today is in gray. Until the day is finished, we won't see the actual color. So this last bar here is in gray. But just before that, we have green. We had yellow for the inner circle. We had green for valuation, and we had green for fundamental. So it did have a lot of green beforehand. This is a stock that's come up multiple times on the scan as a possible buy. Now and again, I will emphasize that when you're buying something going into earnings, you do have to keep in mind that you don't know what the earnings are going to be. And a lot of times we like to assume that we do, but the reality is that there's no way of knowing unless you have inside information. So for that reason, if you were invested into this before earnings, I would see it as a long-term play because you'd be willing to commit yourself to it even if the next earnings result comes in poor, you're expecting that long term the company's going to do well. But when we looked at this previously, mainly the problems I was seeing were that we didn't have a lot of room to the upside. I mean, we had analyst targets that were higher, and we were at the time trading around the lower end of that spectrum. But again, if I'm going into earnings, if I'm looking at this from a short term perspective, which I am, I would have to be concerned about what will happen when the earnings are released. So again, if you're a longer term person, you could have bought that no problem because it did have the right characteristics. At least several times in the last couple of months, you had either all green or you had nearly all green. So therefore, there was reasons to look to buy. Now, it looks like a few people, maybe the institutions had a little heads up on this one, start to buy in just before the earnings. That is something you can watch. That sometimes does give a good signal as to what to expect on earnings. But at the same time, you still have to take the risk that maybe it's wrong. Everyone could be buying thinking one thing's going to happen, and surprises do happen in the market. So, as long as you're comfortable taking the risk of holding through an earnings event, then no problem. But again, if you're holding through earnings, you should be focused on the longer term. You should be looking at holding the stock for years. Otherwise, if you're looking at term, you never want to be in the stock during earnings, but right after room to go, then so be it. So yeah, so today we're currently in all green. This up here updates as we go, whereas the display on here only updates at the end of the day. So as of right now, as of today, we went all green.
Yeah, and so you mentioned the scanner a few times, that it came up in the scanner, and
Yep.
so what I'm going to do is, if anybody's interested in seeing how that scanner works, we do have a video from a previous episode. I'm going to go ahead and leave that in the chat. But that is part of the power of the Madison trading software, is that you can create these scanners to identify these opportunities. And I think, Mike, you hit it spot on. Is, do you want to hold going into this earnings, because it very well might have been 35% the other way, and so the earnings have only validated, and so now it's a good ticker to keep on the watch list. And if there's any pullbacks, maybe that's your opportunity there.
Agreed.
Um, all right, moving on to the next company. It's another company that I had to Google because I wasn't sure who they were. Ticker symbol Plug, PLUG,
Right.
company name Plug Power, and it looks like they do something with hydrogen and the energy markets.
That's correct. So Plug Power is a symbol that I've seen for years, and actually, uh, in 2020, we had quite a few buy signals in this stock. So you can kind of see what happened in 2020. This thing went on a absolutely amazing run. So the good side is, again, we did have some good buy signals that we were able to take advantage of during that time. Now, one of the things about a stock like this is valuation wise, it's always going to be in the red. So this the second from the bottom row, that's the valuation. Now, if you've got a company that basically struggles to generate a profit, which is typical for a lot of startups like this one, these companies usually don't generate any net income. So, for example, here you can see it's been down. But as far as the sales are concerned, we did have some negatives in 2020, but then we went right back into positives in 2021, et cetera. I can't remember what the reason for that drop was at the end of 2020. I have to look that up. But in short, Plug Power does have the right profile for growth. You can clearly see that overall, except for the 1 year period here where basically nothing was happening, you do have consistent growth. In fact, when we picked up on the growth later, it's basically like nothing ever happened. We're right back up there. So that's good. Earnings wise, they're not making money. They have, as I like to say, the Tesla pattern, which is you see a deepening loss at first and then eventually they turn it around. So we hope that they'll turn it around. We don't know for sure, but if we look at the targets, 3742 is the mean target by analysts. We're currently at 2874, so we got about a $10 upside there. $19 is the lowest target. Again, I don't think 19 is likely to be where we're going to be anytime soon. I do think that it's more likely. Sorry, I think it's more likely that we're going to. I don't know why that keeps doing that. Sorry, for some reason my mouse is not cooperating. But anyway, I don't think it's likely that we're going to be back down to here anytime soon. I do think that the overall pressure is clear to the upside, so therefore we would expect prices to generally head higher. So from that fundamental view, 3742 looks more likely to be hit than 19 overall prospect. Now $78 is the highest projected target. I can't say that that's realistic, but you never know. The only things we know is that the company is seeing significant declines in cash flow, free cash flow, et cetera. So this shows, based on what I'm seeing, I would assume that this company is doing a lot of investment into their services. I'll have to look that up, but usually that's the pattern you see when companies are reinvesting. They usually see a sharp decline in the amount of money they have available, and then later on, after those investments play out, they come back. So, in short, if you're looking at Plug, I do think that long term, this actually has good potential. I would definitely look for a buy opportunity below $25, but above 20. Like I said, 19 is not likely to get hit anytime soon. So, just below 25 would be good. That will put us just in between. Oops, sorry, did it again. That will put us just in between the the two lines here, which are our trend lines that are basically there to let us know when there's buying pressure in the market. So basically, we got buying pressure now. So if we can get in somewhere around, somewhere around where my cursor is around $22, that'd be great. And then we just look for it to keep going up. Now, if we get in around there, we've got a really good potential upside. If we're in at 22, the lowest target is 19. We'll have a $3 risk, but our potential upside puts us well into the $15 plus range above where we got in. So, in my opinion, that would be a good reward to risk. We may not get a second chance for that to happen, but I definitely think we can see the stock back around $24 or so a share in the near term. So I'll keep an eye on that. I don't think this is going to be a runaway freight train. Also because we're trading above the price channels. Remember last week we talked about these price channels and why they're so useful. The tops and the bottoms of these channels basically are there to let us know how far the market projects upwards and downwards, the amount of volatility that might be realized in the stock. So we are currently trading above the projected range, which means that there's a very good chance the stock is going to come back down. So if we look here at some of the history of the stock, we can see that usually we're going to trade well within the boundaries of what's anticipated here. So bottom out here, or maybe top out there where we are now. Now, since earnings just hit, that does mean that we have the potential to go farther. But even back here in the past, every time we get these big departures outside, usually we come back down at first and then we just kind of follow that line. So, as of right now, I do think that we're going to likely see a pullback first, and that's where I would look for an entry. So I'll most likely put out an alert for the members. For those of you who are not members of our software, as one of the added benefits, I also give out alerts to opportunities that we find, just like this one here. So on a pullback, if we get one, I'll be putting out an alert that this is a good place to look for a buy, and then we'll have that potential upside that we just described.
Yeah, so if you want that alert, you're going to have to head on over to MadisonTradingSoftware.com and sign up to become a member. And upon further review, it looks like they are a hydrogen transportation company. So they're involved in the transportation and housing and technology around hydrogen. So probably going to be a fairly popular topic over the next couple of years as energy continues to just increase in the news.
They also have the benefit of the green part of it. They're probably going. The reason why the market's bullish on them right now is not really because of their revenue growth. It's actually because of the fact that they would benefit from this new green bill that's been passed through Congress. So that's there's a lot going on here besides just their bottom line economics. So I do think long term they've got some good prospects. So worth taking a shot on, given the numbers.
Yeah, definitely worth putting on that watch list. Okay, moving on in the show, Mike is going to break down a feature in the software that is unique, that helps you trading, that gives you an edge in the market. And today we're going to be talking about using money flow to spot potential buys. And my first question on that, Mike, is what do you mean by money flow? What is money flow?
Great question. Great question. So when we were looking at TTD just a second ago, we actually did see something that suggested there might have been some strong money flow. There looked like there was a short-term buildup on buying activity right here. It was these 2 days, and looks like this day there was some strong buying activity. I'm looking at this third row here, which is tracking the fundamentals. As you can see, the circle is the second one, and whenever it's green, it means that you have basically positive action. Okay, so what's been going on there? Let's just look at that. So, what was going on apparently was that you had, leading up to this event, a net advantage of buying activity versus selling. So this is money flow, and what it does is it looks at each day, it tracks buy trades and sell trades. So every time shares are purchased to create a position, that's tracked. Every time shares are sold, that's tracked. And if the net of buying versus selling is in favor of buying, then you get basically a positive number. And if you don't, you get a negative number. So, what this is doing is tracking the cumulative flow of trade to see if there's more people wanting to buy than sell. And over the last 5 days, ever since the fourth at least, there's been definitely more buyers than sellers, which suggests that people really were anticipating that this could be a good earnings and they start to buy in early. Okay, which turns out to be right in this case. So, how do I find stocks like this? Well, let's look at the characteristics first. Some of the characteristics of trade desk are that number one, if we look at the trend leading up till now, there's no question that the overall trend was actually down. So if you look from where my cursor is here, which was around December of 2021, if I were to track the progression of the price of the stock, it's mostly going down. And just to make this easier to see, I'm going to get rid of some of the technical tools just for a minute. Okay, so now I've just got the price channel. But as you can see, the channel is generally going down. That's exactly what was happening to the stock. Then it starts to bottom out here, and just before the earnings, we get this big pop in buying activity, and then all of a sudden we go up. So the pop in buying activity doesn't guarantee that the stock's going to go up, just to be clear. But in the right context, it can be very powerful. At least at the minimum, we want to know it's happening so we can wait and see when the buyers seem to be able to overwhelm the sellers. So if I want to find this, I need to do something with a screener. Now, here's the thing. Most screeners that I've seen, and I'm talking about the vast overwhelming majority of them, don't even reference anything like this. They don't look at the actual trade history of buying versus selling. But all of us intuitively understand that if there are more people buying than selling, prices go up. So therefore, it would be logical to look at that as an early warning, an early indication that buyers are actually becoming more interested in a stock, or people are more interested in selling it. If you really think about it, if you could know before everyone else does, or at least you would know when the professionals know that there's lots of stock being bought of one company or sold of one company, you know that in advance. That gives you a huge advantage over people who don't, because everyone else has to wait until the stock actually makes the bigger move before the indicators that they use would show them. For example, if I'm looking at a momentum indicator, well, you got to have the momentum first. This is basically saying the engine just got turned on, the gas pedal is being pressed, and the car is accelerating. I need to know about that soon. Whereas another way would say, well, this car just passed us at 80 miles an hour. Yeah, but wouldn't it have been nice to spot that beforehand? That's what the money flow can let us do. So you can actually save screeners. I'm going to kind of cover two topics at once. The screener is one of the tools that I can use to specifically designate what I want to find. The scanner has presets that I can just click on. They're based on certain criteria that we feel would be useful. But let's suppose I want to go my own way and I say, hey, I want something very specific. So I can use the screener. Now, I've actually added my own screening criteria for today. I'm going to go right here to saved, and here it is, positive money flow. Now I create that and I said it look for stocks that are down but are showing strong positive money flow. Looks for optionable stocks only, which at least with at least 1 million average shares per day traded. So I set some criteria. I'm just describing it to myself so that I know what it is. And by the way, for those of you who become members, I will be adding this into the default settings for the screener so that way you can pull it up yourself. All right, so here we go. I just clicked on here, and as I can see, I've selected some criteria. Now, I didn't go through the process of selecting criteria because we did do that in a previous episode, but let me just go over to those of you who are new to this what we've done. I've selected some criteria to screen. One of the criteria is the score. The score is our proprietary system, which uses a three-color code and looks at four dimensions of a stock to determine its relative value and strength. So what I did is I said I want something that has a chart, a technical that is not positive. I don't want something that's already on a trend now. I want something that's either going neutral or is actually still bearish. So the system tells me that I've got some stocks there. Let me just turn this on. Okay, so now let's switch that on. I've got 4,380 stocks that meet that criteria. Okay, so now I turned this on so that way it's actually filtering. Okay, next I want to look at the up down volume ratio. The up down volume ratio was the amount of buying activity versus selling, actual shares being bought versus shares being sold. So I want a ratio that's at least 1.2 to 1, but no greater than 50 to 1. Now you may be wondering what kind of stock would have a buy to sell ratio of 50 to 1 or greater. A lot of smaller stocks might, penny stocks, etc., where almost everyone's buying and no one's selling. We were trying to avoid those type of stocks, so I capped it off at 50. That cut down from 4,380 stocks down to 302. Next, I only want stocks that are optionable because I want things that have a lot of liquidity, a lot of volume. So that cuts me down to 84 stocks. Now, finally, I say I want the average 90-day average daily volume to be at least 1 million shares. The top limit is just automatically set by whatever's the highest average in the market. So right now it looks like 162. I'm guessing that's the SPY. Now it drills me down to 9 stocks. So when I go here and hit run search, now it's showing me a listing of all the stocks that meet the criteria that I want. Now I like to search based upon volume first. So I sort them based upon the average volume over the last 90 days. And then I just look at which stocks show up. And these stocks are not the ones that you probably were expecting to see. Kroger, Clarivate. A lot of these I don't even know. RDOG, Metal Packaging, never heard of them before. Turning Point Therapeutics. I know Atos, One Connect Financial Technology. So these are stocks that some of them I've never even heard of before, but all of them have that criteria that I'm looking for. So now I just have to look at each one. Now, one of the things that I need to keep in mind is this scanner, the screen that I'm using, it's better to do it at the end of the day than during the middle of the day. But reason why is that at the end of the day, everything settles out, so I will know the actual summary. So I would just recommend if you use the scanner, the screener, use it right after market close, like a half an hour after market closes when all the data's in, and then we can see what it looks like. So right now, Kroger, for whatever reason, people are buying it at the bottom. Now, the technical score is neutral, right? It's yellow. The fundamental score, however, is green. I didn't tell it to look for a strong fundamental, but this one has it, so that's the reason I looked at it first. So it's all neutral across the board, except for its fundamentals are green. But when I look at the money flow, there is a lot of buying activity coming in. That's a good sign. So that basically means that perhaps some people are starting to buy Kroger. If I look at the chart of Kroger, I can see that it's down off of a slide from looks like the looks like from the first quarter of this year, March. It was already on a rise and it started to come down, but it does appear to start to bottom out. And this is what the screener is trying to find me, a stock that's showing some improvement and its potential to go up. So this one looks like it's right in the right region, right in the right neighborhood where we might see a rise thereafter. So therefore, I'm just going to keep an eye on this stock. And once it does start to do what I want, then I get in. Now, if I'm comfortable looking at this long term, I may just look for the opportunity to get in when I believe other buyers are jumping in as well. Okay, so money flow is powerful stuff. It is a very effective way to find potential opportunities. Everyone always says, I want to get that stock that's just getting down to the bottom, but buyers, big buyers are coming in. How would I possibly in that? Well, this is the way you do it. You actually use a tool that gives you the ability to see into that, and then you kind of go from there. Right. All right. So hopefully that makes sense to everybody. But there it is.
Yeah, I feel like it's pretty simple. Money flow.
Hmm.
More money, more buyers than sellers equals stocks go up, right?
Right.
Pretty simple.
Yep.
We like to complicate it with all these other fancy tools, but it's lovely to see the ability here to kind of scrape all that information out on a day-to-day basis to get that information to help make your trading decisions. All right, Mike, wonderful tool. If anybody's interested in testing out, trying it out for yourself, head on over to the chat, hit the link, head on over to madisonTradingSoftware.com, sign up for the midweek. We got good inflation numbers, Mike, heading, are you thinking things are going to start slowing down here in August? Is that what we should be anticipating?
This year, no. I mean, if it was a normal year, I'd say yes. But this year, there are too many things happening, and as we're getting close to the fall, I do think that we're going to see a lot of activity. Obviously, politically, there's a lot on the table, not just here but also abroad. So I would say, with the inflation and everything the way it is, and with the Fed aggressively raising rates, the rest of this year is going to be very interesting indeed. So I would strongly recommend that everyone keeps an eye on all these developments that we've been talking about. As far as political, the midterms coming up, inflation numbers, Fed activity, and of course geopolitics. Like, we don't have to know everything, but we just need to get a good sense of what's going on, so we don't get caught on the wrong side of things.
Yeah, and another helpful tip, if you don't want to get caught on the wrong side of things, is tune into the show. Hit that like, hit that follow, hit that subscribe button. Tune
Absolutely.
in. Let us help you find some opportunities. If you've enjoyed the broadcast, we'd love to see you join us on some of the other episodes. And yeah, we'll keep an eye on things. We'll keep our eyes on the software and information that it's given us, and we'll do our best to make wise decisions. So
Awesome.
Mike, thank you for your time today. Thank you everyone for tuning in. We'll keep an eye on any questions. If they come in, feel free to drop them. Otherwise, we'll catch everybody next week. Thank you guys.